Why the stock market is up on Trump's win. Today, we're looking at the market reaction following Donald Trump's projected second term. Bond yields surged this morning as investors responded to expectations of Trump's economic policies, which are generally viewed as pro-growth. Joining us on Yahoo Finance to discuss the implications is Douglas Holtz-Eakin, former director of the Congressional Budget Office and current president of the American Action Forum. According to Holtz-Eakin, one of the biggest contrasts between Trump and the Biden administration lies in regulation. Under Biden, $1.7 trillion in regulatory costs were imposed on the private sector in less than 4 years, double the costs added by Obama over 8 years. By contrast, Trump's previous term brought just $40 billion in regulatory costs. Holtz-Eakin expects a renewed focus on deregulation, which could spur optimism, especially among small businesses, as seen in 2017. Beyond deregulation, Trump's policy plans include extending tax cuts and potentially lowering corporate rates. However, tariffs are also in focus, and it's unclear whether Trump would use them as a negotiating tool or a growth-limiting measure. Holtz-Eakin notes that tariffs could introduce inflationary pressures, posing a potential challenge for the Federal Reserve's monetary policy. The labor market is another area of concern. Trump's immigration stance may limit the availability of skilled labor, potentially tightening the market further. Holtz-Eakin warns this could limit labor supply, putting pressure on wages and possibly contributing to inflation. As Trump's policies take shape, key decisions will hinge on which party controls the House. Republican control could enable them to pass long-term, deficit-neutral tax reforms, using tariffs as a financial offset. However, without control, much would rely on executive actions. Holtz-Eakin emphasized the importance of these developments for policymakers, investors, and the Fed, which will need to assess how Trump's economic approach impacts inflation, labor markets, and overall growth.